All right, welcome back. I'm the Wall Street Yardie. This week has been an exciting week. Monday and Tuesday, very quiet, and then the bulls came back, and boy, did they ever take charge. This market's just showing you that. Just need that one tweet, and then we're off and running, and the bulls are running this week. So, what I want to do is I'm going to get into the chart. I'm going to show you the levels of the SPY and why you want to be careful here and not go all in on this rally, as well as jump into some gold and when we need to get back into gold, as well as I'm going to give you 3 stocks here that coming into earnings season now. Next week is going to be the first week of earnings season. I'll give you 3 stocks we need to watch coming into the week that are going to be important for the AI trade, as well as one that might be good for your living room. All right, jumping right into the SPY chart here. As I was talking about in the intro, you can see here on Monday and Tuesday, no main action, and then we get the news about the ceasefire, and guess what? Boom, market takes off. This is where the bulls take over, right? So what happened here, you see, we got all the way up above our 50-day moving average. Above the 50 days where the market likes to be when we're looking at bullish moves to the upside, right? So if we think the market's going to go up, we want to definitely see the price above the 50-day moving average. That usually tells us that the trend is to the upside. We've been here trading below the 200-day, and you know, they say nothing good happens under the 200-day, and we gapped right on through that. Now, I want to show you a couple things here. One being this huge gap. The SPY likes to fill gaps. If you look back in history, every time we get a gap, it fills it. You know, this was a gap down, so we bounced back up. We also had some gap ups here, and we filled them by coming back down. If you look back in time on your chart, you'll see this pattern repeat itself over and over again. The other thing that's telling me that this rally is kind of weak is that you look at the volumes here. Yes, Monday and Tuesday we were just kind of chilling out. Got the big move on Wednesday after the news Tuesday night, but you know, while this volume was big and it got back up to the averages here, you really have to pay attention to what happened next. While we did the Thursday, we did follow through and go up higher, and then on Friday here we did make a higher high and higher low. So this is good news to the upside if you're just watching the plain charts, but you also have to watch the volume. Volume is the momentum, right? So as we're going up, the momentum is slowing. So this is what's telling me that this rally might not last too much longer, and we should expect a pullback here into this gap. Fill this gap. Like I said, the gaps fill on SPY regularly. It's very rare that you see a gap left open on the SPY, so you want to pay attention to that. So this is why I'm telling you, don't put all your chips in just yet, because this rally probably won't just take off. It's going to pull back. We're going to fill this gap. Maybe we get only down to the 200-day moving average here, which is currently sitting around 665. But the area we want to watch is the 658 level. If we can get down to 658 and you see a bounce off, meaning you're going to catch a candle that touches here, and then the next candle after it is going to have a higher low and a higher high, boom, that's your bounce. Okay, when you see that, that's when I want to put in. That's the higher probability trade. Just from an educational perspective, that's what we're watching. The level is 658 for this week. Some more evidence of that is if we switch on over to the VIX, you'll see that we also have the gap on the VIX. Remember, the VIX is the inverse of the SPY, S&P 500, right? So the general market is measured its volatility using the VIX. So the VIX is the inverse. As the VIX is coming down, less volatility, less worry, less uncertainty, right? Everybody kind of knows what's going to happen when this is coming down and stays under 20. We actually closed below 20 here, so this is great news. But VIX doesn't leave gaps. If you look back in history, big gap up, filled it. Okay, go back again a little bit more, you're gonna find more gaps on the VIX, and every time you find a gap on the VIX, it fills it. Okay, got a big gap down here. It took a month, but it did fill it. It doesn't leave the gaps open. So this is why I'm expecting this pullback that I'm telling you about. The volumes are weak on SPY. We're also seeing that the VIX has the gap that it has to fill, and we know that SPY gaps don't just stay open either, right? So be careful, be cautious right now. This rally is looking good on the chart, but there are signals that it's not as strong as you think it is. So let's jump right on over to the gold trade, and let's see what we're going to get over there with gold, and where we want to, what levels we want to watch with the gold, and where we want to step in and trade on that one. All right, let's jump right in. We're going to chat a little bit about the gold here. You know, as Yardies, we love the black, green, and the gold. All right, so what we're going to do now is, you know, let's try to figure out where we want to trade gold. Right now, gold is in a very precarious place right now, because what you're going to see with the gold is it wants to go up, but it's having a rough time here on the chart. And the reason being is that the Strait of Hormuz is closed. Gold is very much tied to the US dollar. The stronger the dollar, the weaker the gold. And the weaker the dollar, the stronger the gold. So we need the dollar to come down. And right now, with oil prices being where they are above $100, the US dollar is very strong. The petrodollar, as they call it, is very strong because the US dollar is tied to the price of oil. Okay, so this is a very important point you want to pay attention to. So as the price of oil comes down, I believe we're going to see gold start going back up here. So, you know, I have this little prediction line here. I think gold is going to go a little bit higher, maybe up to this 50-day moving average and come back. We might just hang out in this range for a little while. If we do get news that the Strait of Hormuz is open and the oil prices are starting to come down, you're going to start to see gold rally, which is why you're seeing this rally now, is because when we got the announcement on Tuesday, you know, we expected the price of oil to drop. So when that price of oil is dropping, this price of the gold will go up. We see a target up here of 51.44, but you know, if we get it up here, it bounces back. What you really want to pay attention to is the news. As long as they say the Strait of Hormuz is now reopened, that's the key words you want to listen for on the news. Then you know our gold trade is back on, and we're going to be looking to get back up here to 51.44 and then possibly 54.15. So just watching those levels, those are the levels of gold. That's what I'm watching for. What I'm paying attention to, again, remember the key term, Strait of Hormuz is open and the oil is flowing again, right? So when you start seeing oil get back down under $90, that's going to be a good time for gold trade to get back up. All right, so I promised you 3 stocks that we're going to watch this week as we're getting into the earnings season. The big earnings, you know, are going to come probably week after this one, and then the following week after that, you're going to get Microsoft and some of the bigger players. But this week coming in, what I'm really watching are 3 stocks. The first one being TSMC, right? Taiwan Semiconductor, ticker TSM, right? And on the US stock market. So what we're looking here, as you can see on the Yardie side, it's a little bit overpriced right now, but you know, we're going to keep an eye on it. Why? Because these are the guys that make the chips. These are the guys that Nvidia goes to, that Intel actually has some of their own fabs. Some of the other chip makers, Marvell and Avgo, Broadcom, go to get their chips made. So they're going to be key to the demand that we're going to see. And today, Friday, they announced that their revenue was up 35% year over year, which is extremely good. So what we're looking at here, TSM, we're going to pay attention to how well their expenses came in. We want to see if they mention anything about the Strait of Hormuz. One of the things you're going to need to pay attention to with TSM and the AI trade is if natural gas is getting through. Taiwan is a very big natural gas consumer when it comes to making their electricity, and they need steady electricity to make these chips. So if they're going to have any kind of shortage or rationing of natural gas in Taiwan, you want to pay attention to that, because it could affect manufacturing of the AI chips and thus make there a limited supply, meaning the growth is going to kind of stall. Okay, so big one we're going to watch here. Make sure their expenses are not there. Make sure they're not mentioning anything about natural gas. The second AI kind of chip trade that I want to look for is the chips were taking off actually this week. You had Amazon announce a chip situation, and Intel took off big time, and then Marvell as well, MRVL took off as well. But the other one is also not another chip supplier, if you will, right? So Taiwan Semi makes the wafers for the chips. These guys make the equipment to make the wafers, right? So we're going all the way back, picks and shovels, if you think of the gold rush, right? So we're going back. These guys make the equipment to make the chips, and then also the equipment to help test the chips to make sure you're getting quality chips coming out. So when Nvidia and Marvell and Broadcom and those guys need chips, they're going to go to TSM to get them manufactured, but they're also going to use ASML equipment to make sure they get the design and the manufacturing and the quality of the chips tested. So there's another one. This one is coming on Wednesday, and you know, you want to pay attention to what they say about their manufacturing as well as the demand that they're seeing coming into their business, right? So those are the key things we want to watch for that one. The last one I promised was for your living room. So we're going to look at Netflix. Everybody pretty much has Netflix. Everybody watches Netflix. It's something that's a staple, right? So we're looking at Netflix here. Netflix is not overpriced. It's actually somewhat on sale. I have a sticker price of $122, so this is what I think Netflix should be trading at, but right now it's clearly at a discount at 103. So maybe a little 20% discount here, which is okay. It's not a huge margin of safety, but it gives us some room to play with on the price. So Netflix here, their earnings are coming in on Thursday. I want to switch over to the chart a little bit and show you kind of how this one is building up. This is one that I would actually look to trade a little bit, given the chart and kind of the little bit of extra value that we have in here. As you see, Netflix has been a solid company this whole time, just having great earnings, great returns, great management. So we have very high scores here on the Wall Street Yardie site. So let's flip on over to the chart. All right, looking at Netflix now on the chart, we see a couple of things that are quite interesting. Netflix, took this big dive earlier in the year, at the end of last year, when they announced they were going to buy Warner Brothers Discovery. That deal fell through. They're not going to go ahead and buy that anymore. And this is when Netflix, man, it just gapped all the way back up here from 70. So if you were lucky enough to jump in here, you're doing really, really well. If you missed it, no big deal, right? Because as we know, when we go up and we're getting into an uptrend, we're going to have pullbacks. So that's exactly what you saw. We got up here to a peak of 100, came back down, pulled back down into the 90 range, hung out here for a little bit. And this last week, we started breaking out above that. So 100 is kind of our line right now. $100 a share is really where that main support area is, right? Between 100 and say, call it 97 here. As where I have my line, but I don't know that we're going to see a pullback necessarily. We have earnings here next week, as you can see, after hours on Thursday. So Netflix looks like it's running, and usually when you see a stock start running up before earnings, you're going to get it up to the next level of resistance, which I have here as 108. It could also be this 200-day moving average around 106. So anywhere between 105 and 108 is where I want to be cautious. You don't necessarily want to get caught buying here. Your risk reward at this level is not good, because look where our support is, way down here at 100, right? So you could be in for a big $10 pullback if you're buying here at these highs. So what I'm looking for is if it does pull back earlier in the week, Monday, Tuesday, Wednesday, come here, give us a bounce maybe. I don't necessarily like to trade anything before earnings. It's just a crapshoot. Especially when you see it running up this early. A lot of times the earnings will come out and it's going to pull back. Why? Because they sell the news. So, all the market makers, the smart money is already betting that this is going to go well. So when the news comes out, that's when they're selling. So you got to wait till that selling is done and then look for that pullback and bounce. Now, the news could be so great that it does take off, and we're looking for this level here at 110. If it breaks through 110, maybe wait for another pullback to 110. You don't want to just follow this if it starts going up exponentially. It's a big trap, right? So either you take the chance that it's going to go up before earnings, which I don't like to do, because I like to wait to see what the market tells me, especially after we've had a big run up here. This is already a big 10% move. So, we're looking at that, watching that very closely. So if we get up here and pull back off of this level, wait again for that higher low, like we were talking about with the SPY. You're going to get a bounce maybe down here at the 100 level, or maybe even the 97 level in this area. And then that's when you can kind of feel good about going all year. Risk reward is good. You could set your stop loss somewhere down here around 95, maybe even down at 90, depending on your tolerance, right? So thinking about that from that perspective, this is what you want to look for. So earnings coming Thursday. Want to pay attention to this. It's setting up very nicely. Okay, so the next level we're going to watch is here is 110. We break through 110. We've got some good room above up to 120 here. Remember, our sticker price on this was around 122, so that takes us right back up to this high that we had back in October. So that's what we're looking for here with Netflix. So good luck this week. Good luck during this earnings season. We're going to pay attention to what's happening. We're only going to take what the market gives us. I'm going to catch you on the next one. I'm the Wall Street Yardie.